Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, August the 8th, the year 2018. Let's talk trading, building a better Squiggly. I'm laughing because I just got finished reading this email. Guy says they built a better oscillator, this squiggly line. In fact, this oscillator is so good because it doesn't lag. In fact, it's a leading indicator. I mean, oh, what is it? A fool and his money are soon parted. There's a sucker born every day. I mean, come on. This is just playing and preying on people's weaknesses. It's one of them big long emails that they teach these guys how to write with, so convincing. But you see, but wait, there's more. I'm just seeing if they're going to throw in a set of Ginzu knives. I mean, because, you get this whole indicator pack. Oh, and they use the scarcity theory. There's only 200 left, so you better reach in the hip national bank, whip out that credit card, and fire off your order because you do not want to miss out on this once in a lifetime opportunity. Oh man. Thing is, I guess in a way I shouldn't laugh because you know what? They're going to probably sell 200 or more of those indicators. I just pity as Mr. T might say, I pity the fool. Oh, it's just too funny. So, I mean, really, if you think that the Holy Grail is going to be found in an MT4 indicator, you especially a squiggly. Oh, well, I guess I'm preaching to the choir here. I don't think anybody who watches my videos on a regular recurring basis uses squigglies, or they might use them very sparingly. Um, but anyway, but I know one thing people who watch my videos better be using on a regular recurring basis, and that's good money and risk management. Okay, here we go. The yen cracked through the 111 here. It's just going down. I mean, so, if you jumped in on that monthly open cross coming out of that monthly wick zone, you'd be up about 82 pips right now. And for the week, it popped down into the wick zone here, the lower weekly wick zone, about 5 pips above. And those of you just tuning in, all the weekly gaps have filled. And on the daily, it was in the upper wick zone, but there really wasn't much of a candle body here. So right out through the bottom, there was a trader who wants me to do add a column to the dashboard when I get around the back in coding mode, which should probably happen either towards the end of the month or next month. Because he wanted to identify long wicks. I guess he sees it as a signal. But, for me, I usually see long wicks as something to be retraced. I mean, you've got a long wick here, and you see it retraced. You got a long wick here, and see it retraced. It hasn't retraced part of the way, about 50% into the wick. You see this wick here retraced again. Now this long wick didn't retrace. This kind of, but you see this one here retraced. Now, daily range, we've got a handful, 5 pairs over 100, but notice they're all British pound pairs. So obviously something's going on with the British pound. Looks like it's going down. And you can see here, buy zone. We had 1, 2 trades trigger in the short zone. And you can see here that the pivot point was inside the short zone. So really, if you just wanted to fade the pivot, you took a little heat, but weren't in danger here of stopping out. So really right around the open, because of that pivot, should have entered way before there. Otherwise, you only had about 1 pip. So there you have it. Now you can call that a hairy hindsight trade if you like, but when you do the same thing over and over and you're basing it off the same thing, it's not really hindsight. We're basing it off the open and the buy and sell zones off the open. So there you go. Rat zone. Okay, you have an opportunity here and you talk about long wicks. Well, see, long candles, they usually seem to get retraced too. You see this long candle here, this long candle here. You see how price retraced it? Just something to think about, put in your arsenal, something to be aware of. See this long candle here? See how it got retraced? Just an observation. And I did have that one indicator that I need to finish up on. And I think I know what the problem is. It's an MT4 thing. How's an MT4 when you loop and you use that limit, it only goes back a couple of bars. So see, this bar would still be showing that it hadn't retraced. So I just need to have an array that just goes and just retraces, 1,000 bars or however many bars, the trader wants to go back and make sure those get looked at. And here we go. Once again, there's the open, there's the pivot. It got taken out, as you can see once again. Oh, the price action. 3 ball. Green at the line. 1 ball, red at the line. I mean, this happens every day, traders. I mean, you see, you don't really need any oscillators to trade. You just don't. I mean, you can see where, you can use a zigzag line if you need to, but you can kind of see how it's zigging and zagging here. You don't even really need the semaphore indicator. You can see when something's popped through the top. I mean, it's not that hard. I mean, look, you see this was a high for the day. You see this was a low for the day. Yeah, this isn't really that hard. It's not. Because for one thing, on any given trade, you can't guarantee if it's a winner or a loser. So you just have to follow your trading plan. And when your trading plan says to enter and everything's matching on the screen, then you enter. I mean, like right here, 1 ball. It was red at the line. It went down and came back. Now you see it didn't quite make 10 pips, but what did it make? Let's see. Let me do that little trick here. I'll rather start here at the line. Came down to here. There's 6 pips. I mean, it starts coming back. You're up 5 pips. It starts coming back the other way. You're up 5, up 4. And if you see there was selling or buying going on, then you just exit the trade. So you should probably at least made 3 or 4 pips on that trade because we've got to cover the spread. And as soon as the bid jumped above the valley of the ask, then it's time to exit. Of course, it could turn right around and go there, but you don't know that. You don't have a crystal ball. Actually, this is about as close to a crystal ball as you do have, because once it crosses, there's a high probability it's going to keep going up, but then it can cross back the other way too. It's a probability. It's not a fact. So once again, trading, unlike other skills, you don't have a guaranteed outcome. You can follow your trading plan, but on any particular trade, you're not going to have a guaranteed profit. If you're baking a cake and you follow the instructions, chances are you're going to have a decent cake. I mean, your first time might be a little lumpy, looking. It might not be smooth because there's some things you're going to have to get better at. But you're going to have a cake if you follow the instructions. Might not look good, might not be the best tasting cake, but it'll be edible. Unless you made some mistake following the recipe. I mean, it's just that simple. So, baking, cooking, follow recipe, pretty much have a guaranteed outcome. But as you get better cooking, you're going to be, that outcome is going to have even a higher probability. But in trading, whoever the world's best trader is, they put on their next trade, chances are it could be a loser. It could be a winner. Is it a coin toss? Who knows? Depends. I mean, you put this trade on right here. Are you guaranteed to win because of that one ball? No, you're not. You're not guaranteed that win, and you have to realize that and embrace that. And so when you get a loss, you shrug it off and you wait for your next opportunity. If you enter at that line, it was green at the line right there, and then it came back down, crossed this line, you probably stopped out. But here, green at a line there, you made it all back. It may be a little bit more here, red at the line, you made it all back. Well, depending on how long you stayed in that trade. And here you go. See, green at the line, it came back down. But here, green at the line, it went, you could say, well, hey, maybe the first touch doesn't work. I'll do second touch. Well, it depends on where you start. See here, we didn't have a touch. There's your first touch. So, don't try and get too tricky. They're too fancy. It doesn't always work that way. And I'll go through these quickly. Wick zone. Price doesn't like staying in the wick zone, even though there wasn't much of a candle body and we had a huge wick. Price just doesn't like staying in the wick zone. Okay, here we go. Holo, highest open. There we were. Came all the way down here. Lowest open. You had one opportunity from the M15. And you see what happened. Pips to be made. Inventory reduction bar. Okay, we had a short there. There was a long trigger here. Usually you take the first long trigger. Remember, I've got looking at multiple time frames, the H4 to D1, to see where those inventory reduction bars are. And that's not to do a confluence, it's just to see if there's more than one. Once again, daily, weekly, monthly, open, high, low. There you have it. You can see price action since I turned on the screen. Einstein, once again, short there, short there. You can make a couple pips or more just using the Einstein line. So remember, fellow traders, a better oscillator. Hey, if you believe that stuff, more power to you. I hope you have some green pips using it. But remember, it's not what you trade, it's how you trade it. So get out there and drain the banks.